So I received this email a few days ago, the type of email I get all the time from options traders who are looking to make a living trading options. I've been trading options now for about 16 months, primarily using a negative gamma scalping strategy. My portfolio is generally short or neutral deltas, long theta, short vega. My current account size is $31,000, and with that I'm looking to generate between $300 and $600 a month, being that I cannot devote my full day to options trading as yet. My primary strategies are iron condors, strangles, iron butterflies, broken wing butterflies, and straddles. My current broker is Tastyworks, and I generally establish my trade entries based on implied volatility rank. I spend roughly 2 to 3 hours a night reviewing my account activity for the day, prepping for the next day, and researching new ways to trade the market, which is how I found your YouTube post on the weekly broken wing butterfly trade. I really want to turn this into my profession, and I'm reaching out to you to see if SMB has a pathway for someone like myself. I'm open to anything you have to say and appreciate the time. Regards, Jason from Portland. Now, Jason's email contained a lot of options jargon that you may not be familiar with, but you don't really need to know the concepts to understand my answer to him. My advice to Jason is my advice to just about everyone who asks these kinds of questions, and that's just to remember the 3 E's: education, experimentation, and establishment of a track record with your bread and butter trade. So let's go over each of these. First of all is education. The first step in establishing an options trading career is to get an education. In Jason's case, given his accurate and intelligent use of options concepts such as delta, theta, vega, and gamma, which are referred to as the options Greeks, and options strategies such as iron condors, butterflies, strangles, and straddles, it's pretty obvious to me that he has an extensive education in options trading. That does not mean that his education is finished by any means. Options trading is almost an endless universe once you get involved. But this email told me that the education he'll need is more along the lines of expansion on what seems to be a fairly solid base of knowledge in the first place. This is to be contrasted with traders who approach me but have only a rudimentary knowledge of options trading. They really need to start from scratch and learn the fundamental concepts and strategies before he and she could seriously be considered to be on a path to establishing an options trading career. The solid education starts with a course in the fundamentals, such as our SMB Options Foundation course, and then, in my opinion, the establishment of a relationship not only with an options mentor, but also other options traders. It is, in my view, crucial that novice traders join some sort of options community to be able to interact with, bounce ideas off of, and learn from other traders. The good news is that there are a number of these communities readily available, such as our own options tribe, and there are plenty of traders happily willing to share their knowledge with others as a way of giving back. The next stage is experimentation. Once you have an education, you now know enough to be dangerous, and I mean that. Most people come out of an options education process all stoked and excited and convinced that they're going to become overnight billionaires. Market neutral option strategies have a pretty high win rate and a natural edge that can be very attractive to traders who have fallen in love with the rewards but blissfully unaware of the risks. It's actually a dangerous place to be because novice traders will often make the fatal mistake of throwing a large amount of capital into an online broker trading account directly after taking one options trading course and then proceeding to turn that large amount of capital into a small amount of capital very quickly. That's because they skipped the crucial stage of experimentation. Novice traders should get a hold of some backtesting software and begin feverishly to test in a methodical and honest way the different strategies that they've learned by looking back on how they would have actually performed over, say, a 3 to 5 year period. In fact, there are strong arguments that it should be more like a 10-year period in many cases. That takes a lot of work, but how else are you going to assure yourself that these strategic concepts actually make money? During this stage, it's best to backtest as many strategies as you can, focusing on the ones that you seem to be attracted to. Once you've narrowed the list down to strategies that have earned an adequate return over time, then the next stage is to paper trade them using your online broker's paper trading account facilities. All online brokers will grant you an online account that tries to give you a feel for what it's like to trade these strategies live in the market, but only in fact in paper. This is a crucial stage because it educates you on how to use your online broker to make trades and adjustments and to organize your desktop. It gives you a strong sense of what tools you'll need to trade, what your trading workload should look like, and what it feels like to trade multiple strategies at the same time. In short, this stage takes your theoretical knowledge learned from your education and backtesting and converts it into a simulated experience of live trading. Finally, you need to establish a track record with a bread and butter strategy. Unfortunately, paper trading doesn't provide you with a critical element of live trading, and that is the experience of making and losing money in real time, your money. Without the knowledge of how you'll perform under those circumstances psychologically, you really know very little about how successful you'll be as a trader. There is no substitute for live trading other than, well, live trading. The problem is, at this stage, to be perfectly honest, you don't really know what you're doing, so the smart trader will start trading on the minimal amount of capital necessary to trade the strategy or strategies that you've selected to move into your live trading stage. And I mean the absolute minimum. Why? Because honestly, there's at least a 50-50 chance you'll lose money at this stage, probably more like 75-25. Why? Because when you first start trading, there are many things that can happen that can throw you off your game. Execution errors, unfamiliarity with your online broker software, theoretical issues with your strategies, and so on. The only way to iron all of these out is to live trade, yet errors from those beginner issues cost real money. So why not make it a very small amount of money? Once you've gotten to the point where you have a strong feel for the fundamentals of live trading, then and only then can you think about trading a little bit larger. Trading a bit larger is an important step in the process because your emotions change when there's a lot of money involved, and if you're going to ultimately become a professional trader, you'll be trading large amounts of capital, and you need to start getting used to keeping your emotions under control when a large amount of money is at stake. You'll need to trade a reasonable amount of capital, say $25,000 to $50,000 on a consistent basis for at least 12 to 24 months before anyone should seriously consider you to be entrusted with their capital on a proprietary trading desk like ours. During that time of live trading, you'll find that strategies that worked in the backtesting and paper trading phases don't work as well in live trading. On the other hand, at the same time, you'll find yourself gravitating towards one or two strategies that you have found are consistently profitable for you and for which you have a high comfort level. I call these your bread and butter strategies, and they are different for everyone, depending on your personality. These bread and butter option strategies are the key to your being able to successfully convince a proprietary trading firm like ours that we should entrust you with our capital. So the final stage is to establish a track record with your bread and butter strategies and then begin to approach proprietary trading firms for the opportunity to trade their capital. So remember the 3 E's: education, experimentation, and establishment of a track record with your bread and butter trades. You won't really be able to succeed without all 3, and each one takes time. If you have the passion for trading that all of us here at our prop firm must have, then you'll have enough determination to complete each of these 3 steps and put yourself in the best position to succeed as a professional trader.